Hey folks, here's an update on the challenge where I'm trying to make 50% return in 1 year. Unfortunately, last week was not ideal. It dropped from 2,333 to 1646. So that's this blue line here. And you can see I'm almost at the yellow trend line that I have to hit in order to succeed with this challenge. The option trades did quite well. I made $231 last week for a total of 1365, this purple line here. But the huge price drop is actually just because of the drop in Google stock, which I have 100 shares of. So here's a chart of Google. I had a 116 call and a 110 put because I thought there was much more downside risk than upside. So even though like during the day on Monday, when Google was at 115, I put a call right above it, almost in the money. And I made some nice premiums there because I mentioned if the stock price does go up, it's not going to go much higher than that. But I was more concerned about the downside. So that's why I chose what I thought was a conservative price, 110. And it looks like Google closed the day at 110.16. So it barely expired out of the money. So I did not have to get assigned 200 shares, but that was pretty close. Let's see what we can do this week. The main channel seems to still be intact. That's this one over here. After it hit to the top, I mentioned that it's most likely going to pass straight through the middle blue line here and go straight down to the bottom of this channel. It looks like it's probably going to do that. So using a measured move, I'll use this one over here. That seems to be the same angle. It looks like we could end the week right around here on September 2nd, because today is August 29th, Monday. September 2nd is the end of the week. So that seems to correspond with right at the bottom of this channel if it goes there. Now it could bounce up a little bit and it might hover around this 110 level as well, but pretty much I do expect it to continue going lower. So I'll probably put my put option strike price maybe around the 108. I mean, it's at 109.7 right now, so I don't have to go too much lower because even if it drops through that, like I said last week, I would buy Google at 110 anyway, so anything below that is really a bargain to me. So let's say around the 108 price, and then for the call, like I said, it's probably going to go much lower than it is going to be higher. So I think 116 is okay, maybe at 115, because even if it goes up, it might fill that really strong down move on Friday, but it probably won't go up much higher than that. So really, I'm just taking the spread that I had last week, and instead of 116 and 110, I'm just moving them down and spreading them out by $1. So I think that's pretty much what I want to do. Again, I'll have to go into the options chain to look and see what the premiums look like. So let's do that now. For the 115, that looks like a 1.2 standard deviation, so a very small chance, but this can be a little bit misleading because if you factor in the momentum of the stock, then the delta could get skewed one way or the other. Okay, so I'll probably start with like a 115. It looks like a pretty good spread there. I don't have to go higher or lower. And then on the put side, again, I'm going to sell 2 puts and 1 calls just like last week. And looking at the price, so 108, I'm already getting $1.28 in premium, so that's really good. Do I have to go down to 107? No, I think I'll just choose 108. That seems like a really good premium to get, and I'm okay owning 200 more shares at 108. Actually, that is how much I bought my first 100 shares at. So yeah, so now I have a short strangle. I'm going to increase my put contract number to 2. All right, and for the price, I'm going to choose, well, it looks like it's maybe going up, so I will choose the bid at $3.05 and submit my order.
Order filled.
There we go. It filled at 306. And I guess it's because the price of Google is continuing to go down today. Here's a look at the price action over the last hour. Wow, so it's really dropping there. So that's probably one of the highest premiums I've earned in 1 week. So I still think there is downward momentum, and the price, if you look at the EMA, it's still pointing down. I think over the course of this week, it'll continue to drop further. Now, last week, I said the same thing, that Alphabet shares might continue to go lower, which is why I put my call slightly above the stock price and my put a lot lower to give me an extra margin of safety below. So why not this time do the same thing and put like a call there and then like a put strike here? I want to have more leeway down here because I think the stock is going lower. And of course, the whole idea is to have the stock end the week within these two lines. So the reason why I'm not doing that this time and my call is actually higher and my put is actually higher as well, and it almost looks like I have an upward bias, because what will happen if the stock were to fall below this channel, for example, what will most likely happen is it'll bounce back up and try to retest the bottom of this pink channel. So when it does that, then I will be out of the money again. Plus, even if I happen to miss it and the stock price goes lower, then I would be fine with that as well, because I know there's a bottom to Google at some point. Like, I don't know if it's at 105 or 100 or 95, but at some point there's going to be a ton of buyers coming in to pick up Google. So maybe $86, but it's very unlikely for Google to continue to fall further and further, because the company is making like twice as much money now as it did like a few years ago in terms of profitability. So I'm just playing the odds, and I think it's very unlikely for Google to drop that much that quickly. Okay, so thanks for joining. I will update this for next week, and we'll see what happens.